Welcome to another episode of Spy Trader. I'm your host Chip McSnazzy, ready to bring you the latest and greatest in S&P 500 news. It's 6 a.m. on August 21st, 2024, so grab your coffee, sit back, and let's dive into the market moves that matter. Summary of key news items. 1. Target. Strong earnings beat expectations. Target TGT reported Q2 revenue at $25.42 billion, marking a 2.6% year-over-year increase. Net income skyrocketed by 40%, up to $119 billion. 2. Market reaction. Target shares surged over 13% post-announcement. 3. Comparable store sales growth. Target saw a 2% increase in in-store sales and an 8.7% rise in digital sales. 4. Improving discretionary sales. Categories like apparel and beauty are rebounding, hinting at a shift in consumer sentiment. Analysis and insights. Target's stellar performance is a big deal for the retail sector within the S&P 500. Their 40% increase in net income and a 2.6% bump in revenue shows not just resilience, but a robust bounce back. This performance points to a rebound in consumer spending, which is critical for the broader market health. When consumers splurge more on discretionary items, it usually means they're feeling confident. And let's face it, confidence can be quite contagious on the stock market. A 13% jump in Target's stock isn't just a pat on the back for them, it's a signal flare for the entire retail sector. If a retail giant like Target is doing well, investors might start wondering who's next. Market implications. 1. Retail sector signal. If consumer discretionary spending is up at Target, other retail stocks within the S&P 500 might reap the benefits too. This could imply a broader trend of market optimism and increased investor confidence in retail shares. 2. Investor sentiment. The bullish sentiment around Target could lift other boats in the same harbor. It isn't just a win for Target, it could be a win for similarly positioned retail companies. 3. Economic indicator. Target's performance can be viewed as a signal of economic stability. If folks are hitting the checkout lanes for non-essential items, it suggests they're not just scraping by. Trading recommendations and reasoning. 1. Buy Target, TGT. With a 13% surge, some might think the party's over, but I'd argue there's more room to dance. Their increased EPS forecast and successful push into digital sales show forward momentum. Catch the wave while it's still forming. 2. Look into similar retailers. Consider adding other retail giants to your portfolio. Think about Walmart or Costco, who might also see a positive ripple from this trend. 3. Tech and services supporting retail. Stocks like Shopify or logistics companies that enable retail success could also be sleeping giants. As digital sales grow, companies providing the back-end service will profit too. And here's one just for laughs before we wrap up. How do you make a commodity trader laugh? With a corny joke. In conclusion, to sum it up, Target's strong earnings report paints a sunny outlook not just for them, but potentially for the broader retail sector within the S&P 500. Keep an eye on consumer spending trends and monitor related market movements. As always, stay informed and trade smart. That's all for today's episode of Spy Trader. If you enjoyed today's insights, don't forget to subscribe and share with your fellow market enthusiasts. Stay tuned for our next episode in a few hours, where we'll continue to track the movers and shakers in the S&P 500. Until next time, I'm Chip McSnazzy signing off. Happy trading.